You're welcome to Remit Trade Academy. In today's video, I'm going to show you how to use the Ichimoku Cloud Trading Indicator with a very simple strategy called the Ichimoku Cloud Trading Strategy. Let's dive right into the video. The Ichimoku Cloud Trading Strategy. So first of all, the Ichimoku Cloud Trading Strategy can be used for trend identification, momentum trading, and to recognize support and resistance level, and also it can be used for trading signal. So it can also give you points to trigger your trade in the market. So for the purpose of this video, I'll be using the OKX platform. Now, if you've not registered on OKX, check the link in the description of this video and do your OKX registration right away. I'm going to explain what this indicator is all about and how to use it perfectly. So right here on OKX, I will simply put my chart on full screen, and then I will go to this very area, indicator, and then I will have to search for a Ichimoku Cloud indicator right here. So I will put it on my chart, and then if you look at it very well, it's not that visible. So I will then increase the visibility of this very indicator. Now the input here should remain the same for this very strategy. So I will just increase the visibility here. So after increasing the visibility of this very indicator, if you look at it, this indicator is an overlay, and it's very important for you to understand each of these lines and how they work. So for this video, watch the video to the end, because I'm going to explain each of these lines and what they actually do. That is what they are used for, and how to actually get a trading signal, enter a trade, exit, and how you can also place an ideal stop loss. Right here we have the Ichimoku Cloud indicator, its component. So the first one here is the blue line, which is called the conversion line. So if I go right here, we see the blue line here. The blue line here is also called the conversion line. Okay, now we also have the red line here. Now the red line here is also called the baseline. The red line that you are seeing on the indicator right now on the chart is also called the baseline. Now the blue line and the red line serve as a simple moving average. The blue line is very sensitive to the market, so it reacts faster to the market than the red line. So we can also say that the red line is lagging compared to the blue line. The red line and the blue line, if you see, when there is a fast movement in the market, they go apart. That is, there is a diversion, so they go apart from each other. This very area, you see the market is moving fast to the upside, and this red line and the blue line here diverge from each other. That is, they go apart. The second component of this indicator is the cloud. Okay, now the cloud here is this very cloud. So we have the green cloud and the red cloud. Now when you see a green cloud on the indicator, it means the market is in an uptrend, and when you see a red cloud, it means the market is in a downtrend. The green line of this very cloud here, which is this green line, is also called the leading span A, while the red line is called the leading span B. So this green line here is called the leading span A, while the red line here is called the leading span B. The main component of this very indicator, the Ichimoku Cloud indicator, is this cloud. So this cloud shows you the direction of the trend. So when the green line is above the red line, then the cloud will be green, which indicates that the market is going up. That means we are in an uptrend. And when the red line is above the green line, the cloud will be red, which indicates that the market is in a downtrend in this very example. If you see it right here on my chart. We also have another component here, which is this green line, and this green line is called the lagging span. So this green line is also very important on the indicator. That is the component of the Ichimoku Cloud indicator. So now the strategy is very simple, and I'm going to walk you through how to enter the market, how to place a stop loss, and how to also exit the market with profit. Remember, this strategy works 85% of the time and should only be used in a trending markets. Right here in the markets, if you want to locate an uptrend, you have to ensure that this very green line, which is the lagging span, and the cloud is far apart from each other. That is how you can locate that the market is already trending. In this case, the market is trending up. So the first thing you have to do in this strategy is to ensure that the green line, which is the lagging span, is above the chart, which is above the chart right here. You see it cross over the chart. And then the next thing, you have to ensure that the blue line, which is the conversion line, which is so sensitive to the market, is above the red line, this red line here, which is the baseline. And then you also have to check and ensure that the candlestick chart is above the cloud. That means it has to cross above the cloud. So right here is where you're supposed to take a trade, not here. Around this area, we can see a whole lot of, crossover with the conversion line and the baseline. So right here is where our strategy works best. I repeat the strategy again. Number one, you have to ensure that the green line, which is the lagging span, have to be above the chart. In the case of a buy, the chart have to be above the cloud, that is up. You have to ensure that the blue line is above the red line. So in this case, our condition is satisfied with this very candle right here. If you look at it, this very line, which is the green line, is above, and then the blue line is already on the red line, and then the cloud is down and the chart is above. Okay, so at this point, we can now take a trade with this very candle. So you have to wait for this candle to close. So if this candle closes here, you have to take your trade. Now, if you're taking your trade here, where should your stop loss be? Like we always say in normal price action, if you're taking the trade here with this very long candle, your stop loss should be not at the immediate support, at the support before the immediate support, and then we can ride the trend to the upside. Now, where will you exit this market? It's very simple. You will exit this market in the area where you see multiple close above the green line, this very green line here, which is the lagging span. So around this area is where we have to exit the market, where we see multiple close above the green lines. In this case, we see a multiple close around this area. So if we pick the long position right here and we enter the market around this area, and then our stop loss was here at this area, and then our take profit target is where we see multiple close above the green line, which is this very region with this very candle right here. Okay, so if you look at the risk to reward ratio of this very strategy, you see that this is 6% and you have here 18%. This is about 1 to 3 risk reward ratio. So it's a very good trading strategy, and like I said earlier, this strategy works 85% of the time. So this is for a long position. That is when you want to buy the markets. Now let's look at other example in case you want to short the market. In this very example, for a short position, you have to ensure that the green line, which is the lagging span, is far from the Ichimoku cloud. Okay, so when you identify that, remember, in the case of a short position, this one have to be below the chart, which is the green line, have to below the chart, which is below the price. And then the chart, which is a candlestick, have to go below the cloud, which is the Ichimoku cloud right here. And then you also have to identify and know that the blue line have to be below the red line. So around this area, with this very candle, we see all conditions certified. So with this very candle, all conditions are met and we can take the trade right here. We will be in massive profit. So if we take the trade with this very candlestick right here, and we are to place our stop loss not here but slightly above this very resistance level. So if we come here and take our short position, and then if we take the trade around this area, our stop loss is slightly this area. We want to exit the market right here where we see a multiple close below the green line. So with this very candlestick where we see multiple close below this very green line, that is the lagging span. So this very area is where we have to exit the market. So if you look at this very strategy or this very entry, you discover that you have about 31% profit to our target right here, and then our stop loss right here is about 8%. So this work very well. If you look at here, you have about 1 to 5 risks reward ratio thereabouts. So if you look at another example again, you see that this strategy work well in a trend. In this very strategy, don't use this indicator where you see this very pattern, it won't work. It will give you a whole lot of fake outs, where you see the green line, which is a lagging span, and the blue line, which is a conversion line, and the baseline, the conversion line, everything, both the cloud is in each other. In this very area, you're not supposed to take a trade because there is no entry pattern around this area. If you look at this very area, this is a very nice place to take a trade. Why are you taking a trade here? The reason, one, because this very line, which is the green line, which we call the lagging span, is already above the chart in the case of a buy. And then we see the blue line is above the red line, which is a conversion line, is above the baseline, and then we see the cloud is already forming green, which indicates an uptrend is coming into the market. Not only that, we see this green line, which is the lagging span, is far away from the cloud, which means the market is going to ride up. Like I said earlier, this green line, which is a conversion line, and this red line, which is a baseline, acts as a simple moving average for this very market to go up. Okay, so if you are taking a trade here, all conditions are met with this very candle. We see the red line is below the green line with this very candle. Not only that, this green line is up, and then the cloud is already down below the chart, which signifies the market is going to go up. So if you take the trade here, and it was a long position, so if we take the long position right here, and then our stop loss will be slightly below this very stop loss right here. Our exit will be where we see multiple close above this very green line. So our stop loss should be here. So if you look at here, you have 3% risks, and then your profit is 12, which is 1 to 4 risks reward ratios. This strategy works well 85% of the time. All you need to do is recognize the trend and use this strategy like I have said. Thank you very much for watching today's video. If you're new to the channel, there are other educational content that can help your trading methods. So you can check those videos out right on Remit Trade channel here. And if you want to enroll for the Remit Trade Intensive Cryptocurrency course and mentorship program, in this program, I train you how to trade cryptocurrency very well, right from the scratch, from the beginner level to advanced. So check in the description of this video, you will see a WhatsApp contact, and you contact me immediately. Ensure you subscribe to the channel, hit that like button, and don't forget to turn on the bell notification. If you have any comments, comment below. Thank you, and I will see you in the next video.